Welcome to ForexTV.com's New York Forex Market Buzz. It is Tuesday, December 8th. I'm Julie Sinha, and right now we are going to speak to Back Bay FX President Stephen Leahy about market action. Stephen, good afternoon, and thanks for joining us again.
Good afternoon, Julie, and as always, thank you for having me on.
So, Stephen, it's definitely a different picture in the marketplace from last time we spoke. Huge surprise on Friday with NFP. Also, Canada came out with some impressive numbers, too, at the same time for jobs. And it seems like the consensus is that the dollar will continue stronger this week. How strong is up for question, but definitely want to start out with your thoughts about, let's go back a little bit to Friday and what panned out here in the marketplace.
Sure. So, boy, as you said, what a heck of a surprise. And when we spoke last week, Julie, you and I spoke about, we felt here at Back Bay FX that the market was at a bit of an inflection point. It was looking for something new, and I even thought it was going to be kind of geopolitical events, something like that would happen. I didn't necessarily think it would be a economic data release, but boy, was I wrong. And so it certainly was the Friday morning jobs number. That was a home run for the U.S. dollar, essentially. And so we think that what's happened here, obviously a heck of a momentum reaction on the trade, and we think what we're seeing here is some follow-through. And while it stopped out a lot of people who have been short dollars, we don't know that the bottom has been reached on dollar. We still have a bias towards weaker dollar and therefore higher euro dollar, lower dollar yen over the next few coming months. And
it comes with trading, Stephen. Thank you. We do appreciate you mentioning that call that you guys had on euro dollar, and it was getting close to what you called for the week of Thanksgiving. We're getting towards that 152 level. Didn't quite make it, and then of course, but then we had this shock to the system, which shocked a lot of people. And even if it's revised, we talked to a couple analysts are saying even if revisions come and it's off by the thousands, it's still going to be a positive number overall, and it's going to carry some weight. What do you think about that?
I would agree. That number is so above expectations that even any revision downwards a little bit is not necessarily going to be a bad thing. I do think that at least in the short run, like I said, this dollar strength has got some momentum to it, and so right now it's really a momentum trade. There's no technical analysis behind it at this point in time. Clearly, as a economic those who trade macro economic fundamentals may see this as the turning point. I would dare say that I think it is a significant piece of data, but for us, on a purely fundamental basis, not a real turning point, but something that catches our attention. So at this point, clearly the momentum trade is to be long dollars. We'll see how long that lasts. Quite frankly, it could be through the end of this week. But we still favor on a fundamental basis, we favor short dollar positions.
Listen, to talk to you more about this reversal, this idea of a reversal, it's definitely come into question. Most analysts and strategists that we speak to do agree with you that we don't have enough here. We don't have enough support to say that the U.S. dollar is actually reversing its direction and the trend. So I do want to ask you, though, what do we need to see a reversal, to see that happening? And, of course, we're coming towards the year end. A lot of markets are off anyway, a lot of window dressing for the books. So let's talk about that. What do we need to see to show that there is a change in the marketplace?
Sure. So a firm belief here is that on a daily basis or even weekly basis, closing at certain levels, the close on a daily basis, which is really 5 o'clock Eastern time, close on a weekly basis, are really confirming points for us. And so, obviously, the last few days, this dollar strength is really powering along here. And so, we're going to look and see where this closes on a weekly basis. Furthermore, I'll actually jump in here and add that there's a couple points of data coming out fundamentally later on this week that now, with this move in dollar, these two data points, which had been a little bit remote, are going to be much more interesting for everybody. There's the Treasury capital flows coming out on Thursday morning, and also there's a Treasury budget coming out Thursday afternoon, I think 2 o'clock East Coast time. Two items that had not always gotten that much attention, but I think Thursday should be a good day for trading around news for those who are so inclined.
And also speaking about those reports, we also have jobless claims on Thursday. It might be looked at and analyzed a bit more just to see if those numbers support the data that we've seen beforehand. And what about also ratings put into question today for the UK and the US. We could argue, too, that maybe they should have been put into question a little bit earlier, looking at that ratio between debt and gross domestic product for the UK and US. But again, it's always can shake up at least economists who might not be moving the market, but just looking at those, the AAA being put into question can always make the market player a little bit hesitant about what they're going to do next. What do you think about those ratings? You just kind of brush it off when you heard the news from Moody's?
I think that they confirm what we've been talking about for a while. To us, sterling pound and the U.S. dollar are both in kind of a race to the bottom. It's one of the reasons that we're not trading sterling versus dollar at this point in time. We think they're both heading in the same direction. But it is interesting to note, again, kind of that macro fundamental news. And, I think we're getting mixed signals on a real high-level basis here, right? As far as interest rates go, the Fed, to me, it's very clear they're not going to raise rates anytime in the near future. They may reverse some of their quantitative easing measures, but same thing over in the UK. They're not going to change their fundamentals. They may play around with some of the programs they've had in place for a long time, but I don't think that's strong enough to reverse the oversupply of dollars or pounds out there in the market.
And Stephen, I'd like to get your opinion on looking at some of the major pairs right now,
Sure.
and then see what cross pairs you're focusing on, if it's still Euro Pound, which has been very quiet today. But let's start off looking at the majors. I want to tell you what other analysts have said so far yesterday and today and see what your opinion is. We're told to stay away from the Swiss franc versus the dollar. Dollar yen said if you didn't get in, it's too late. I just want to see, what do you think about these major pairs? What do you like? What do you not like? What does Back Bay FX look at?
Sure. So clearly, for us, when we look at euro dollar, and I think you will recall that we don't do a heck of a lot of intraday trading, but we're more positional. One of the fears is that as of yesterday and today is a confirmation, it's kind of broken the bottom line of a channel that had been built up, euro dollar moving higher, really since like April or May. So that certainly is a concern to us. And that's why I think that this momentum trade might be the way to go for the rest of the week. And so I guess in the short term here, trying to think nimbly and trade on euro dollar, I do think you kind of ride along and go short on this one. It'll be interesting to see what happens when London opens up tomorrow morning, which way they want to take this thing. You also mentioned euro sterling, which, as we've been talking about for a while, has been one of our favorites. To recap, it has, in the last year and a half or so, become really something that you can trade on an intraday basis, whereas previously it really didn't move. It stuck around a certain level for a month at a time. So euro sterling has given up some ground in the last couple of days, but not nearly as significantly as dollar has risen. And so we'll actually hang on to our long position on euro sterling. And again, I think that there's a psychological resistance, support level at 0.90 the figure. Right now we're trading at about 0.9045 on euro sterling. We think that 0.90 the figure seemed to be a pretty good support level over the last few days, and if you have a chance to buy into euro sterling a little bit lower from here, we think that it's a pretty good risk-reward scenario, using somewhere below the 0.900 as your stop-loss level.
And then also looking at central banks coming out later. New Zealand, I believe tomorrow. We have SMB, BOE on Thursday. What about Swiss franc? That's definitely, we're getting different opinions on the dollar versus Swiss franc and the Swiss franc crosses. So I just want to see what your thoughts are on this. Is this something that you would recommend to stay away from in the short to medium term, or are you guys looking out to see what happens next here?
I'll tell you, we generally don't trade dollar versus Swiss. I think that Swiss and dollars are both kind of the safe haven assets, and I don't think that they move a heck of a lot on an intraday basis. There's clearly been a trend in place over the last few months here, heading down to the parity level. We broke through it a couple times. We closed down below parity a couple times. Now we're back up here. Like I said, we don't trade on that one ourselves, and so I'm not going to offer a very well thought out opinion here. So I'm going to hold off on any opinions here.
And also, just to add to that, right now it seems like the spot market has been crushing a lot of traders, and the surprise volatility that we've been seeing recently has been a little bit scary. And I just want to see what your thoughts are overall, too, just looking at this. I mean, you even mentioned it earlier and pointed out to this that there's some pairs that you're not going to do in intraday action. And right now the market seems a little bit ugly in some places. So what are your thoughts about overall right now, what's going on?
Yeah, so clearly today specifically there's a lot of risk aversion going on out there. That's why you'll see a lot of the cross pairs dropping off. Dollar strengthening versus a couple of the majors, yet it's weakening versus yen. What that tells me is that the cross pairs, the yen-based cross pairs, which have always been considered a risky asset, used to be really the carry trade. Those are selling off pretty significantly, and that's what's pulling down the majors and also the dollar-yen, right? Because dollar's going a different way versus yen than it is versus the majors. And what that tells us is very clearly the overriding significant pairs today are going to be those crosses. And furthermore, I'm a bit repeating myself, going cyclical here, but the crosses have always been viewed as a risky asset, and so if those are really selling off as hard as they are today, well, then to me that's a big risk aversion play in the market, and those generally don't happen just for one day. We tend to think those happen over the course of a few days. So we'll be watching for the crosses to go even lower in the coming week.
And also, Stephen, if you can set us up, we can wrap up this interview. Let's talk about what you're mentioning when we look at the London session tomorrow, too. Set us up. What are you preparing for? What are you looking at? What are you focusing on as things quiet down? Or we expect them to quiet down usually past 12 noon Eastern Standard Time. Of course, we've been a little bit surprised lately. But let's talk about your advice to traders right now as we head overnight and into tomorrow.
Sure. I think that, like I said, there's really a momentum play going on here. And we spoke earlier about euro dollar or sterling or dollar in general being strong, except versus yen. I think that for traders who want to put on a position here for the next few hours, meaning leading into London's open tomorrow, I think you still ride this short risk crosses, meaning euro yen or sterling yen. Again, the momentum's heading in that direction. I feel as though you don't need to be as worried about your entry point when you have momentum heading in your favor, such as with those cross pairs. That being said, both those are really volatile pairs, and you've got to use your stop losses wisely on those, especially when you're trying to intraday trade them.
Okay, Stephen, thank you so much for your time and good advice about looking out for those stop losses.
You're very welcome. Thanks for having me on, as always.
This has been ForexTV.com's New York Forex Market Buzz with Back Bay FX President Stephen Leahy. I'm Julie Sinha. Be sure to keep watching us on ForexTV.com for the latest news and commentary live and on demand.